Hello and welcome to this daily market commentary for Tuesday, the 21st of January 2020. A new week is upon us, and with that comes some new focus. Yes, Monday was a holiday in the US, which saw equity and bond markets close there, and FX was very quiet around the globe, so I didn't want to bore you with the lack of activity. There's nowhere to jazz up holidays. They're usually non-events, and Monday was no exception. Tuesday would be a different story. Hong Kong's outlook was downgraded by Moody's. The Bank of Japan had their monetary policy statement. The Chinese coronavirus continues to spread with further deaths and confirmation that it can be passed from human to human. The Davos Economic Forum begins with President Trump wasting no time to take a swipe at his two favorite targets, climate change activists and the Federal Reserve. And there is a small battle of the president's impeachment trial, adding some economic data releases from the UK and Germany. And we have a full day of action in front of us. So what does it all mean for the markets? Well, for Asia, it will be an immediate risk-off scenario with all Asian equity markets heading lower, the Hang Seng closing down by more than 2.8%. For FX, the main mover will be dollar yen, falling from 110.20 down to an initial low of 109.89. With that, yen crosses would also move lower. Euro yen being the main mover, dropping from 122.20 down to 121.88. Gold would head the other way, climbing to a high of 15.68 on the negative sentiment. But better than expected employment and earnings data in the UK saw sterling benefit, rallying from 130.10 to a high of 130.83 against the dollar, and better than expected zoo data from Germany, which is economic sentiment and economic conditions, had euro against the US running from 110.90 to a high of 111.18. From the doom and gloom of Asia, we have some bright spots in Europe, which would have gold do a full reversal, dropping back to 15.52 and help US equity futures rally off their worst levels. Wall Street opens with some minor losses. The Dow Jones initially down 50 points. But that would improve during the US morning, with the both the S&P and Nasdaq making it into positive territory. Dollar yen would bounce back, briefly touching 110.10. And so the US market would shrug off the negativity from Asia, but that would change on two headlines. First, a statement from US plane maker Boeing that they do not expect regulators to sign off on the 737 MAX until mid-2020. Boeing stock takes an immediate dive, taking the Dow Jones with it. Then news that the CDC, or the Center for Disease Control in the US, has announced the first coronavirus case in the US in the state of Washington. Now the whole market heads south, with the Dow Jones down 200 points at one point. Dollar yen drops down to a low of 109.76, but does manage to hold above support 109.70, and euro dollar drops down to 110.81. As euro yen drops back to 121.72, gold would rally back to 1560. Equities close off their worst levels, but the Dow Jones is still down 152 points on the day. Dollar yen closes around 109.85, and euro closes at its lows, 110.82. Sterling closes around 130.45. It's a messy end to the day, with the coronavirus headline catching the market off guard and pretty much taking center stage on the day. Onto a technical picture, and I'm going to revisit the Aussie dollar chart, an hourly Aussie dollar chart, really just as a reminder of the head and shoulder pattern on the hourly, with Aussie employment data looming and currently trading not too far above that sort of critical 68.40-ish level. I'll let you decide the best way to potentially trade it, but keep in mind that Australia also has a suspected case of the coronavirus, and is obviously coming off the back of these terrible wildfires. So plenty of negative sentiment at the moment down under. And with that, I hope you all had a good day, and look forward to speaking with you tomorrow. Cheers.